We move on to our next presentation by Daryl Blakeway. What are the cost implications of compliance? Daryl is a qualified chartered accountant with over 20 years post-qualifying experience in the corporate tax arena, both in respect of direct and indirect taxes. She is the Africa Sub-Area Tax Performance Advisory Leader, specializing in tax function effectiveness, tax process, and controls and tax technology. And prior to joining EY 7 years ago, she held various tax and treasury positions in commerce. She is the global tax account leader on Transnet SOC Limited. During the period where internal audit was outsourced to EY, her responsibility included consulting across the full range of direct and indirect taxes, as well as the integration of tax into the internal audit methodologies. Subsequent to the end of the internal audit outsourcing, EY has been approved as a member of a panel to provide ad hoc taxation-related services to Transnet. Daryl is also the global tax partner on Anglo Gold Ashanti, where her responsibility includes the reporting and disclosure of tax risk on a global business. Daryl, we look forward to your presentation.
Gosh, this is quite a daunting room. There's a lot of you out there. So my topic that I'm going to be talking about today is the cost of compliance. What does it actually mean? So I've actually moved it from not just a compliance angle, but also talking about it's the evolving tax transparency and compliance landscape. Things have changed fundamentally over the last 5 or 6 years in terms of increased transparency together with compliance. Let's see how this goes. There we go. So I think just to open my presentation, and I'm looking particularly in Africa, so whilst it does apply globally, I'm looking at how the tax compliance costs, and especially associated to transparency initiatives, have gone up, particularly dealing in tax jurisdictions within Africa. So to quote Jeffrey Owens, who was in the T magazine last year, tax directors need to wear multiple hats. They need to be fortune tellers and be able to read the tea leaves to predict the future. They have to become diplomats so they can steer their companies through these uncharted waters. And at the same time, they have to remain very good technicians, even if technical skills are no longer enough. So you can just see that whole broad thing of how the role of tax directors has changed. So if we look at these, what are our uncharted waters? So this was a survey done by Lloyd's in 2013. Prior to that survey, the high taxation was ranked at the 13th risk. It's now ranked at number 1. What is quite concerning about this is that you look at high taxation as a number 1 risk. When you're looking at loss of customers, cancelled orders, cyber risk have now gone below tax. So it's a huge jump from number 13 up to number 1. The survey didn't, unfortunately, cover all African countries. It did cover Europe, the Americas, Asia Pacific, and South Africa. I just think if we looked across Africa, I don't think the results would be any different. I think that high taxation would be very high. I think the one thing that comes out, which is the second point in the yellow part, is this whole conversation about fair tax and your social license to operate. What is really happening now is when you've got these really big branded names and big multinationals, there's a certain social license, there's a certain license you need to operate. It's no longer just about being compliant, it's about being completely transparent. And associated with that is an increase in the compliance costs, but also an increase in your transparency costs. What other information do you need to go beyond compliant that you don't end up in this fair tax argument? You've seen there's been a lot of activity in the UK, obviously a lot of big companies there, the Google, Starbucks, those kind of things. If you look at that and you think, how are people reacting? And I will show you later how leading multinationals are reacting to this. It's an enforced compliance almost, but from a transparency aspect. Is you'll see a lot of people now, in terms of publishing their tax contribution, go onto Google and type tax contribution. You'll see leading companies have got that on their website, exactly what they're contributing. Other companies have gone even further than that, and they're not just talking tax contribution. They're talking overall economy contribution. So they talk about